If you're wondering what happens to the stock market during an election year, then in this video, we're going to explore that conversation. And one of the things that I want you to know is that timing the market is never a good idea. It's always best you remain in the market and continually invest on a regular basis. That is the basic idea from most of the documents out there on this topic of what happens during an election year versus a non-election year. How has the stock market performed prior to an election and after the election? One thing that is common to all of them is that prior to the election, the volatility in the market increases. And that is just because the stock market does not like uncertainty. And as we know, anything uncertain will scare investors. I mean, just like you and I, we don't like things that are uncertain. When we see predictable directions, then we're more likely to continue and proceed in that path. But when it's unpredictable, we become skeptical. People take away their money from the market, they sell investments, and those factors definitely would impact the stock market. Now, whether it's the Republican or the Democrat, the party isn't always a factor in these predictions or this volatility that we experience. The point here is the two parties, the two sides would often have their views, and those views would shape how the market will behave prior to the election and after. Now, another thing to mention is right after the election, what happens is that the market settles down, which means that a lot of the volatility then goes away because now everybody knows who is in, who is out. And there are times when you would have a certain industry, a certain sector, maybe pick up speed because of the policies of the president that is being elected. So those things can slightly change the sector performance, but overall, the stock market has consistently returned more money over time. And hence, you want to be in the market rather than be out of the market. What actually impacts the stock market during presidential election years? The stock market in presidential election years is primarily affected by the same factors as during non-election years. And we have factors like the economy, inflation, the Fed policy and interest rates. We have global events and unrest. And last but not least is investor confidence about the future. Now, as we know that these factors are things that we are currently looking at. The current situation is that interest rates are slowly coming down. We know that they should be making another cut in a few weeks as at recording this video. And with that cut means that they are open to slowly ease off on the high interest rates that we've been experiencing for some time. Now, the other factor is inflation. According to the latest inflation report, key inflation rate hit 2.1% in September as expected, closing in on Fed target. Now, which is a great thing because what happens is the Fed is looking for that 2.0% on inflation, which is their target, and we are approaching that number now. What is likely to happen is that with this new president coming in, not knowing who's going to win at this time anyway, we are worried that their policies may cause inflation to start picking up again because prices of some goods may start to increase and that could push inflation up, which means that the Feds may not be able to continue to reduce rates as expected. And that factor could impact the market right after the election, especially going into the first quarter and second quarter of 2025. Now, one of the factors that often impacts the cost of goods and services is the cost of oil, or think about it, fuel. And if fuel continues to go up, well, the cost of services and goods will likely go up as well. Now, one of the issues that is driving this fear of the cost of oil going up is, of course, the issues between Iran and Israel. Now, with that developing as it is right now, we don't know where things are going to go. We don't know what will likely happen in the near future, but the hope is that they will find an amicable solution to their issues. And also, we have the issues between Russia and Ukraine still going on. And this is reaching a point where nobody is really talking about this anymore like we used to because, well, we have the Israel and Iran more on the forefront, I would say that the best approach is to look for opportunities in the market and invest as you are able. Whether you invest on a bi-weekly basis, you invest on a monthly basis, on a quarterly basis, whatever your schedule is, stick to it and don't worry about what the political environment would look like before or after the election. Rather, let's focus on the long-term approach and stick to the plan of investing on a regular basis. Now, remember, we also have other investments that we should consider in a portfolio, like things like bonds. Could be an other asset to start looking into, because as interest rates starts to go down, the value of bonds will start to pick up. And that might be a way to maybe offset some of the volatility in the portfolio that we're holding. If you found value in this one, don't forget to check out my next video, and I'd love to see you in the next one.